opening a 529 plan to save for your child's college expenses can be a great way to build savings while reaping tax benefits. Some of the benefits of a 529 plan include tax-free growth and tax-free withdrawals if the money is used for qualified education expenses. But one thing that stops many would-be 529 owners is understanding what exactly a 529 plan will actually cover. What exactly are qualified education expenses? If you've been considering opening a 529, here are some common qualified expenses that you should be aware of. We're also going to go into depth on some non-qualified expenses that people sometimes get mixed up on and think they do qualify. Let's make sure we don't fall into that trap. Hey everyone, this is Andy Hill with The College Investor, investing and personal finance for millennials. If you are new to the channel and like what you hear, please hit subscribe so you're ready when our next video comes out. Before we jump in, know that not all states conform to all rules, and you need to check with your state. We keep a 529 guide up to date to help you out. You can access that guide below, or you can click the link in our video description as well. Okay, let's talk about qualified expenses for a 529 plan. A 529 plan only covers expenses that are related to education. However, there are rules. Most qualified expenses cannot exceed the cost estimates made by the school that the 529 beneficiary will be attending. Typically, the school's financial aid office will mail this to students or post it on their website. For example, if you were looking for estimated costs of attending UCLA, lucky for you, UCLA puts out some detailed information to help you out. With K through 12 education, only tuition is qualified up to $10,000 per year. Also, it's important to note that pre-K and childcare are not eligible. When we're talking about post-secondary education, that would include things like college, university, trade schools, vocational programs, and registered apprenticeship programs. Finally, the state the account owner files taxes in is the state that the rules apply for. Since each state maintains different rules for qualified expenses, make sure you check with your account owner's state of residence. That account owner would typically be the parent. Okay, so here's what's covered. Tuition. Tuition is a qualified expense for both full and part-time students at accredited institutions. To be accredited simply means the college or university has passed standards set by a reviewing committee. While the majority of colleges are accredited, be sure to ask the financial aid office ahead of time. Then you've got room and board. If the student is attending college half-time or more and the room and board are paid directly to the college or university, this is a qualified expense. If room and board are to be paid to a landlord and a grocery store, the budget is set by the school and is available to students who are attending half-time or greater. If the rent paid to a landlord is higher than the school's room and board estimate, the excess is not considered a qualified expense. For example, using our UCLA example from earlier, if it's estimated that it will cost $9,800 for room and board off campus, then that means you cannot use more than $9,800 per year for your 529 plan to be qualified. Technology items. You can use a 529 plan to cover technological needs such as computers, printers, laptops, and even internet service. These items must be used by the plan beneficiary while enrolled in college. You can also use this to get software that's required for school. Think of things like Microsoft Word or Adobe Photoshop. These tools that they might need in class for students, right? Make sure you check out the campus bookstore and look for education versions of the software because it's a whole lot cheaper. Books and supplies. Books and supplies are qualified expenses, but only the ones that are required. Also, this budget will be set by the school, but if it's a required expense for your class, you can always use your 529 money. Beyond textbooks, some common items include lab supplies, Scantrons, and even basics like pens and paper. Then we've got student loan repayment. Student loan repayment is now a qualified expense on the federal level, but it may not be eligible in your state. Again, check that out. You can take out $10,000 per individual as a lifetime limit. Then there's K through 12 tuition. Tuition at a public or private K through 12 school is a qualified expense on the federal level up to $10,000 per year, but it may not be eligible in your state once again. Click on your state on our 529 plan guide and see if your state qualifies. Again, you can access that in our video description. Then you've got IRA rollover. Starting in 2024, you can potentially roll over up to $35,000 into a Roth IRA. However, this is a limited option with a lot of restrictions and some states won't comply. Okay, now let's jump over to expenses that you think might qualify, but actually don't. Transportation and travel. If your child is going away to school, you're going to inevitably deal with transportation and travel expenses. You need to move them in, you need to move them home, and you're likely going to have to fly them home for holidays and vacations depending on where they go to school. Plus, if you're using a 529 plan for overseas school or study abroad, visas and other travel are not qualified. So you can't use your tax-free 529 plan for any of these. Then you got general electronics and cell phone plans. Cell phones are an everyday part of life now. As such, they are not considered an education expense, and while necessary, they can't be expensed and paid for with your qualified distributions from your 529 plan. Then you've got sport and fitness club memberships. Many colleges offer sports or fitness clubs for their students to use, and they typically charge a small monthly fee. Even though the college and university bills this expense, it's not considered an education expense. Since it's not an education expense, you can't use your qualified 529 plan money to pay for it. Insurance. Health insurance is so important for college students, and if you don't stay on your parents' plan, many people opt to use a plan provided by the college or the university. Many schools offer health services and insurance on campus, which is very helpful. However, once again, just because the expense is billed by the university, it's not education related, and so you cannot use your 529 plan for it without paying a penalty. So, what happens if you use a 529 for a non-qualified expense, you might be asking? Well, one of the main benefits of investing in a 529 plan is the federal and sometimes state tax benefits. Owners of a 529 plan are given these breaks when the money saved is specifically used for college expenses. In the event that you need to withdraw the money for a different reason, you'll have to pay federal taxes on the account earnings and a 10% penalty. If you've received a state tax break, you may also have to pay that one back as well. Make sure you check with your tax preparer because every state has different rules around this 529 plan. You should also be aware that if one of your children decides not to go to college, you could change the beneficiary on the account without penalty at all. So how do you withdraw your 529 plan funds, you might be asking? Well, depending on your state's plan, there are typically several ways to withdraw your 529 plan money. For example, ScholarShare allows you to request a withdrawal online by mailing in a form via snail mail or by calling their call center. You can have the funds sent to the participant, the beneficiary, the school directly, or a third party. Many 529 plans, including ScholarShare, allow for ETF transfers as well, which can speed up the process dramatically. When you take a withdrawal, you are not required to provide any proof of whether the money is being used for qualified or non-qualified expenses. However, you are required to declare it to the IRS when you file your taxes, and so it's important to maintain accurate records should you need them during that process. So, in the end, is a 529 worth it? Well, there are many benefits to participating in your state's 529 plan. But it's important that you know exactly what you can and can't use your 529 plan for. When it comes time to use the money you've saved, be sure that you know the laws and you're utilizing your 529 savings in the most efficient way possible. If you have specific questions, it never hurts to speak to an accountant who's familiar with 529 plans. Or again, check out our 529 plan guide on our website through the resources below or by clicking the link in our video description. Thanks for hanging out today, everyone. This is Andy from The College Investor. We'll see you in the next video.